Okay, it is 11:01. Let's get started. So I'd like to welcome everyone to the commercial underwriting show where we're going to underwrite, where we underwrite properties and stuff like that, right? So today we're going to finish up. And what I went on ahead and did, because I really want to get through this. So I went on ahead and jumped ahead a little bit and started completing the underwriting. Okay, so but I'm not going to skip it. I am going to just walk through it so that everyone can at least see the steps. Okay, so that way you can at least see the steps. But yeah, I went on ahead and said, let's finish this off today. Now, before I get started, I need to know if there's anyone that live close to Dallas. Do you live in Dallas, around the Dallas area? If so, can you please tell me?
I have family in Dallas,
Okay,
so I don't live there, but I have family, close family.
okay. Hold on one second. I gotta see how far is this property?
So Dallas, Mansfield, Fort Worth, Cedar Hill.
All right, so this particular property is 1 hour and 9 minutes from downtown Dallas. That's from downtown Dallas.
North, south, east, or west of Dallas?
North. So why am I asking that question? Because with the size of this property, if there's someone that's not really close to this property, we're just going to use it. We'll finish underwriting it, but that's going to probably be as far as it's going to go. Because when you need to have boots on the ground, when you're dealing with this, because I can tell you right now, the lender's going to want to know how far you are from the property, or how long it's going to take you to get there and stuff like that. And then for your own purpose, you should want to be close to this property, close to any of your properties, because if something kicks off, you need to hurry up and get there. You know how it is. So we're going to finish this thing, and let's take it from there. Let's see how it play out. If it plays out to where we see that that we can move forward, then we will. If we see that we don't have the boots on the ground, we don't have the necessary personnel, then we're going to use it as a learning tool. Okay.
There.
Yeah.
Charlundra is there as well.
Yeah, but I'm looking for someone that's
Yep.
I'm looking for someone that's
Investing.
that knows commercial investing and has to they know if we were to pursue this property, would they be able to at least drive by the property, take notes of the property? You know how it is. You know what I'm talking about. You know what I'm talking about. So, but let's cross that bridge when we get there, because there's still a couple of things that we still don't know. Okay, so I'm going to share. So at this time, I'm going to share my screen, All right, so let's go ahead. I'm going to go ahead now and share my screen. Let me know when everyone could see it.
You can see it.
Cool. And I would like to again welcome everyone to the commercial multifamily, to the commercial underwriting show. All right. So since we're going to complete everything today, what we're going to do, I'm just going to pick up from the beginning and walk through everything. Okay. So it's a 2-bed, 1-bath, 800 square feet. Okay. Here, I also want to show you right down here, you'll see the rent roll, the trailing financials. Okay. And then we went on ahead and inputted the information of what the current rents are and what's the market looking like. Okay. That is so let's go back. Current rent roll. And then from the current rent roll, what was like the highest, what was the projection that we could hit, seeing where he has already gone. Is he above the market? Is he below the market? Okay. So now, so what I also did, because I fell off and got a little lazy this week, I didn't know where these rents were. And I wanted to know. So what I did, staying within a 2-mile radius, and that could have been over. But how many of you use AI to help you in your underwriting? Exactly. I see that. Good, good, good. So AI is a very excellent tool to use. Yes, I'm going to always say double check, right? Because it's not perfect. It does make mistakes. And it says that at the very bottom of the screen. It says that it can make mistakes. So, but what I did, I was as specific as I could possibly be, giving AI the address, the square footage of the apartments, how many units, the age of the construction. And I said, try not to go outside of a 2-mile radius. I need to know the average square feet. I mean, the average rent for these apartments. I said, and take the 2-mile radius from the subject property. So don't just drop a pin somewhere. The subject property, go 2-mile radius. So it went 1.5-mile radius, and gave me the rents. It gave me 3. And the rent range from a low of 1,000 to a high of 1,375. The middle point was 1,245. That was the midpoint. The sources, Zillow, Zumba, apartments.com. If it doesn't give you the sources, ask for the sources, because you want to check. Now, I'm going to tell you all something. I did not check. Let me say this. I did not check for the unit, the unit quantity. Okay. I did not check for that. Because this property that we're doing is 21 units. So the 3 other properties, I don't know if they are 20 units, 50 units, or 100 units. So I will have to go back and check that. But that's in due time. Okay. So, but guess what? From looking at the rent roll, looking at what the market is doing, guess what? He's at 1,200. The second and the third floor came in a little less. And I can understand that. You got people that got to climb to the second and third floor. Your first floor apartments are going to be a little more, right? So I could think that. So, okay, so now I know. So let's go back to the rent roll. I mean, not rent roll, but the underwrite. So let the 1,100 stay where, I mean, let the 1,200 stay where it is. And these two right here, 1,120, let them stay where they are, because this is the second and third floor. These are the current effective rents. As you can see, it's not that much of a spread. So for here, you'll notice I did not put any that's going to be renovated. Okay, I did not do that. Because is it that much of a profit for an 11? Okay. All right, so let's move on. Input. So I did put in some information in reference to the taxes, what the taxes came in, what Richard gave me. And I put in some assumptions here, some operating expenses here, acquisitions here, okay? So that gave me all of that. Here, now this is where I'm gonna pick back up. Although I do believe everything is complete, but this is where I'm gonna pick back up. And the expense, I just want to make sure that all of our expenses were put in. And if all the expenses were put in, then I'm gonna go ahead and move on. So I'm just gonna pick up right here. And make sure that we're good to go. Do we have any questions so far? Any questions while I'm pulling up, which I don't talk about me. I already know I should have had this ready.
I have a question.
Sure.
Based upon the rent that you were talking about, it sounded like you said that the market rent, according to those three entities that were searched and the three properties that were found, has the potential of being about 1240, 1243 a month. So he's right on point where you're saying the 1,200, but there's potential to increase the rates $40.
Yes, and the potential is there, right? Because the question, real question, even if we increase it to $40, let me see. Hold on a minute.
I'm not saying that, but having the potential is good.
Yeah. So let me turn up my volume. I think that's why. Let me
It
turn
could
up my
be.
volume. All
Can
right.
can you all hear me? Or
Yeah, I
am
can
I
hear you
speaking?
now. I think it was on
Okay.
my end.
No,
Okay.
she was a little low.
Oh,
Low?
okay.
Yeah, Alicia, you were a little low. It was a little hard for you. No, you're gone now.
Is that better?
Yes.
Okay. Thank you. Sorry about that.
Okay, so we at the expense. All right, so let's go ahead and hit back to the expense. Okay. All right, so I'm just going to run through this contract services. Yes, we did put that in. Repair and maintenance. Yes. Oh, wait a minute. Repair maintenance. Yes. Whoa, wait a minute. Why do I have 1043? I have 1043 for repair and maintenance. Did I subtract something? All right, I'm going to put in the 10433 for repair and maintenance. Administrative. Okay, so that's good. Uh, payroll is blank. Water, sewer, trash. I remember combining all of those to 17. That's good. Property management. They have right here. I left, so I stopped right here. Okay, so for property management, they have 10 to 14. Okay. Insurance, good. Taxes, good. Okay, so now I just want to put a little note right here. I did reach out to JT. So I'm going to put a note waiting for JT to tell me where insurance is going to be. According to our purchase price, this is where our taxes are. Okay. So everything has been put in. Are there any questions at this point in reference to our expenses? Okay. So let's jump up a little bit. So this here is going to be complete. That's complete. Okay. The operating reserves, this is a new a 2020 building. Usually what I do for operating reserves, which is, I'll call it emergency money. I usually, depending on the age of the building is, and it's usually going to be um, one, it's going to be the amount of one, holy smoke, why I can't talk this morning, everyone. I don't know. I don't know why I can't talk this morning. But usually what I do is look at what the mortgage payment is going to be, including principal and interest. And I will take that amount and put it in for operating reserve. This is emergency money, just in case if we need to carry this building for a year. Okay. Just in case. The likelihood of it happening, we get in there, the likelihood is slim, but you always want to be on the cautious side because you never know what's going to happen in the economy. Okay. You never know. So to be on the safe side, I'm gonna have to come back to that because as we walk through this, you'll see where I get that, where I'm gonna pull that number from. And then we'll give the money back at the end of 5 years, 3 years, 2 years, or we just hold on to it till we sell. Okay. So as we can stand right now, this is where we're looking at for the pro forma. And here are some more numbers on a monthly basis, looking at everything. As you can see right here, we're looking pretty okay, pretty good with the growth. All right. So now with renovation, we did not put anything down for renovation. This can change. Since we're not looking at renovating, we could still say, well, we're not going to renovate, but let's at least put something to the side. And it doesn't have to be 5,000 a unit. It could be 3,000 because to be honest with you, as it stands right now, I'm not looking at renovating because you saw that there's not a very big spread. So I'm not really looking at renovating. Okay. So if we want to, we could easily go back and put something in. All right. So this would be for the renovation. Okay. And then down here. All right. Here's the financing. So, like I said, I went on ahead, jumped ahead a little bit. The asking price, the whisper, I will have to get from the broker, and I will reach out to him today. Has anyone uh, had has anyone had any communications with a lender that's here? Anybody dealing with the lender? Anyone know what rates are looking like? If you're curious and you like to know, you could go to, and I'm gonna tell you where you could go because I have it right here. Oh, hold on a minute. Just heard back from JT. Whoa, JT is coming in at 13 to 15. So let's make the correction. Let's update. Hold on a second, let me share my screen. So for the insurance, I came in at 12. JT is saying anywhere between 13 and 15. So we're going to go with 15,000. That's where we're going. We're going to up that to 15. Okay. All right. Let's jump back to financing. All right. So in reference to financing, I put in 6.5. Does anyone know what rates are? Oh, I was going to show you. I was going to show you something. I realized. Hold on a minute. We're going to have another quiet group today, huh? I understand. All right. So let me share my screen.
The only rate that I see recently that I've seen,
Yeah.
and I wish that Richard was on the call because he'd be able to get it for us, is 9.5, but that's on an SBA loan.
Okay. Okay. So and so now, so Alicia, are you familiar with the Treasury?
Yes, sir, I am.
All right. All right. So so everyone, a lot of the lenders, they look at what the 10-year Treasury is. And the 10-year Treasury is here. Let me take it to the top. As you can see, it goes from 1 month to all the way up to 30 years. But here's the 10-year Treasury. So for commercial people like us, they're going to base it off the 10-year Treasury. Now, I know you're looking at a 4.49. You're saying, Darryl, it's 4.49. That's not what you're going to pay, though, because the lender is going to add what it needs to add. So you could usually add 2 points to this, right? They usually add about 2 points. So you could add about 2 points to this. So you could say 6.49, and what I put was 6.5, and I could probably go as high as 7. Some people may be looking at 7, but let's look at 6.5. And when Richard gets back, we'll ask him uh, what the rates are going for. Okay. So what I did, let's take it from the top. Purchase price, I'm just estimating at 2.5 million, which brings us in at 119,000 a door. Cap rate's coming in at a 9. Market cap is at a 6. 75% LTV. Interest rate 6.5. 36 months or 3 years of interest only. They may only be doing 2. If anyone here has gotten a loan, tell me what it is doing for IO. Is it 24 months, 36 months? Give me a heads up. Okay. Amortization over 30 years. This is for the senior debt. No bridge, no secondary, no refinance. Let's just say we're selling at the end of 5 years. Okay. This was an estimate, a guessing of what they're looking for. I could just about say they're probably looking for probably another whole million, million and a half. They probably want about 4 million, but there's no way. I'm sorry, but price per unit graded it. No, that's not happening. So, so I'm gonna let this stay right now. I'm gonna reach out to the broker to see what the whisper is, and then make any necessary adjustments. But as you can see right here, 2.5. We're gonna sell in 5 years. The exit cap 7.5. Okay, 2% on the sale cost, and this turns red. So, but
Darryl,
yeah.
you still have the U.S. Treasury sheet.
Oh, do I? Oh, okay,
Yeah.
hold on a minute. I'm glad you said something. 'Cause I'm up here busy talking. Holy smoke! All right, what y'all see now?
You're underwriting.
Okay, great. All right. So again, purchase price, price per unit, purchase cap, market cap, LTV, interest rate, 36 months IO, if we could get that, 30-year amortization. We're not doing the
Darryl,
bridge. Yeah.
Kenneth left a comment. He said Freddie average small balance says 6.27%.
Okay, so good. So I'll go let that stand 6.5. That's good. That's good. Yeah, always go a little higher than what's given, just
Yep.
in case. You know how that is. You're at that closing table, something comes up, interest rate jumped up, and you're stuck. Okay. All right. So perfect. Thanks, Kenneth. No refinance. This is just a straight. We're going to sell it at the end of 5, which is right here. Okay. So now what are we looking at? 7.5 on the sale, holding it for 5 years. That's really, wait a minute, I really went up too much. No, I could take that to a 7. 2% here on the sales cost. That's what the broker's going to get. Sale price exceeds total project cost. No, that means we're going to have to cut back. We're going to have to bring this down or look at the underwrite. Where can we take our numbers so that it's going to be fitting? Now, that says no, but let's take a look over here at your IRR and your equity multiple. And as you see here, you can see why it's a no, right? See right here? Let's go right there.
Darryl, can I ask a question? Going
Yeah.
back on here, are you holding a mortgage for 36 months, but then over here you're saying 5 year? When it has the 36 there, is that an interest only for 36 months?
Yep. That's what that is.
Okay.
Yes, interest only, right there.
Mm-hmm.
Only 3 years.
And just for 3 years, but then you're doing it, but you got the 5 year over there?
Mm-hmm. Yeah,
So
right
what
there.
you'll do, refinance in 2 years? I mean,
No,
in 3 years, you'll refinance it?
no, I'm selling in 5. So once the interest only period is up, then we'll be paying principal and interest. That's what's going to happen. So you
Okay.
have 2 years where you're paying principal and interest.
Okay.
Yeah.
That's the whole time, the whole
Yep.
30.
Yep. The whole period
Mhm.
is right here. That's how long we're going to hold this property for 5 years. Thank you, Felicia.
Mhm.
So, but as you look at your IRR, your equity multiple, you're going to see that your numbers, no, they're not very attractive when it comes to trying to sell this to investors. Okay. Yeah. All right. If your net present value is a negative, that shows losing money. You really want your net present value to be a 0 or greater. Okay.
Question, question for you.
Mhm.
So if you have someone that is looking to say cash flow,
Mhm.
right? And they don't really care about the IRR or the month to month cash or annual cash flow. But what they do care about is the 20% upon sale, right? Because that's what that says, 21.04. So how would you approach that situation?
That's an excellent question. So if the person doesn't care, then yeah, I would. Is it only going to be that person and I doing the deal? Because I could tell you right now, if it's only him and I, we're good to go,
Okay.
right?
So would you approach
Now,
this
now,
with,
now, let me also say, hold on a minute,
yeah,
because I said that in a general sense. Oh, we're good to go. But did he, hold on a second. I want to show you something because you better have money. Now, you got to have cash flow coming in right
right.
here. So let's say, he say, hey, Darryl, listen here. I don't want to hear all that. I don't want to hear all that. Just tell me, do we have cash flow coming in? After all expenses are paid. And here it is right here. So this is our debt service, everyone. And look right here, everyone. Look right here. Do you see that DSCR?
Mhm. That's
Right?
good.
That DSCR is going up. Okay. The DSCR is going up. This is your cash flow. Because you probably see, okay, so here's the NOI right there, right? Hold on a second. Let me make sure I got this right. Because that should oh, hold on. Hold
That
on,
should
hold
be
on.
higher, right?
Yeah, that should be higher. What we got going on here? Hold on one second. Year one, gross, total expense. Oh, I'm sorry, everyone. Hey, I'm sorry, everyone. Here's the NOI. Here's the NOI.
Right.
Sorry about that. All right. So, because Alicia
That
said,
was
hey, and I
expensive.
caught that too. I was like, yo, wait a minute.
Yeah.
I was like, that should be a negative. But okay, so anyway, so here we go right here, everyone. Our NOI is 175,000. Okay. After your NOI, right? Now, here, you're probably saying, well, okay, you're taking 11,000 out of here. Um, if it could be done, yes, so let's not worry about this. But let's just say we're doing it. So now 175, then you're gonna take away the 1115, and that's going to leave us with 121. And then it's gonna be not 121. Then the 121 is going to be subtracted, and that leaves the cash balance of 42,235. That's annual. So if you want to look at that on a monthly basis, you will come over here and say, okay, with that, what is on a monthly basis? And then on a monthly basis, after the debt service, you're going to have $3,000 every single month. If you're happy with that, if it's just going to be you and me, no one else. And if you're okay with this, I'm okay with it, right?
So
I'm
look at it a different way. If someone was to put their funds in a certificate for 5 years or some type of other investment for 5 years, are they
mm,
really going to earn 21%? And so if it's not like a JV situation and you're raising capital, would that be an approach to say you're not going to earn 21% in 5 years? You can
and
do
you're correct.
investment.
Yeah, you absolutely listen. I agree with you, and that's why some people may do that, right? And look at this. You're talking about as long as we keep this property. Oh, I do have to input one thing, everyone, which I did not do. 3 years, 53,051. Hold on. Right there. Okay. So we could now we don't have to do 53,000. This is a brand new I'm gonna say a brand new building. We can actually do about half. I just put in a year. Okay. But you can really do about half for an emergency reserve. Okay.
Why not
You
spread that amount over a few months so it's not so impactful?
what giving it back? Like give back half. Let's say no, this is still the IO period. So let's say give back half, let's say 26,000 here, then reduce this to 26,000. You talking about like that?
Yeah, you're giving, okay, that 56,000, is that only a portion of the reserves?
No, that's all of it. The 53,000 is what when we sell, that automatically goes back to that automatically go back to the investors.
So why
So it'd be
not wait until
2650.
the sale?
That's yeah, this is the sell, year 5.
Oh, okay. Gotcha. Gotcha.
Yeah, that is the
Okay.
sell. So okay, so let's take that back down to 0 and take this back to 53,000, and then at the end of year 5, everything goes back to the investors and so forth. So we'll be good to go. But but I like that question. I like the question that you asked because there are some let's go back to the finance. That's where I was at, my finance, right? Yeah. There are if you have an investor that's willing to do that, and that's cool. That's great. But that's far and few. I don't know too many. All other investors, they're looking for a greater return, doubling their money. So and so forth. So we're going to come back to this because we're going to have to play with this to try to get these numbers in line. You're not going to have a choice. Okay. So let's jump over to sources and uses. So right here, you'll see I did not put anything in for loan origination fee. I left that blank. I left really all of this blank. And the reason being is because this is for closing costs, I went 5%. And usually it doesn't take 5% for to close on a property, 125,000. I could tell you that from experience. So this really could just incorporate the loan origination fees and like the appraisal fees and stuff like that. And also depending on your lender, you may have to pay for this up front out of pocket. I could tell you that right now. Okay. Everything else is for 1 year, paying for everything in advance, property taxes, paying for everything in advance. Okay. Depending on your lender, they're going to either escrow that taxes and insurance or they're not. Okay. But if they're going to escrow it, let them. It saves you from a headache. So this particular deal, there's no pref, but we're going 75% split. So the LPs will get 75%. The GPs will get 25%. Okay. So 75% to them. And this is just nothing but the metrics again, that's on the performer or the finance page, excuse me. Then coming over here, no waterfall. We're not doing any of that. No hurdles. I'm keeping it simple where it's a 25-75 split. Okay. And the rest of this is really We don't have to weigh in on it only because we're going to keep it simple. And this is it right here. As you can see right here, this is for pref, hurdles. We're not doing pref and hurdles. So this would be it right here. And these other tabs, I don't really need to, these are just like error checks to make sure that um, the software is functioning properly. These are this is fail, letting you know. So these are my targets, and I didn't hit none of my targets except for that one, right? None of them. So, and here's the deal summary overall. So let's go back to the finance. And before I move on, are there any questions? Because we're going to have to work on this no. We're going to have to work on the investors' returns, and we're going to have to work on this here decision. Okay. Are there any questions? Oh boy, another quiet day.
So would you say that that the first step then is to find out what the whisper price is? And
Yeah.
then from there, you'll know if the numbers work.
Yeah.
And if
Yeah.
the whisper price is at or under what you're estimating, then you look at what expenses to see if you
So
can reduce expenses with the property manager.
yes, we're going to have to look at several options. One is the expenses. We're going to have to look at oh my goodness, expenses. Oh, rents, right? Rents.
Right.
We're going to need to do a little deeper dive in the market rents, because remember what I said.
Yeah.
I gave Copilot, just don't go up, try to stay within a 2-mile radius, 800 square foot, 2-bedroom apartment, and it gave me that information. But we really need to check on those 3 apartment complexes, because if those apartment complexes are larger, we're going to need to try to find something that's a little more comparative. Okay. And I didn't do it. I'm gonna tell you right now, I did not do that, but it's not like I'm not going to do it, right? So I didn't do it. But yes, Alicia, you're absolutely correct. We got to look at the expenses. This is where you build that relationship with a property manager. Now, this is a small complex.
Yep.
Do you want to manage it? Do you want to try to manage it yourself? And I'm telling you right now, there's a lot involved. There's a lot of work involved. So you're going to have to ask yourself, also, what are those property managers going to charge you? Because I'm gonna pull up something right quick. Hold on one second.
Where was the property located?
Outside of Dallas. Yeah. An hour from Dallas. So right here, as you see right there, the property manager, they put down 3.8%. Well, let's just round it to 4%. Okay. I'm telling you right now, it's not going to be 4%. I'm telling you right now, it's going to be higher. You're going to pay probably 9%. I'm telling you right now. You're not paying 4%.
Now, when you're saying
So
you're paying 9%, are you calculating in like operating expenses and repairs in with that?
no, I'm talking about management fees. The property manager, he's going to charge you for his services 9%.
So he's talking about the accounting expenses,
Okay.
any
Software.
marketing, yeah, websites, the management software, all of those things that they don't tell you up front.
So
Most
what is the 4% that they're saying?
They're
management,
probably managing it themselves. What do you think, Alicia?
yeah, they may be managing it themselves, or they have a friend or a long-term relationship. They may have had the manager's relationship for a while. That manager may live on site. They may live near the building, so it's easy to do. Given the turnover, because there was a lot of turnover, right?
Yes, it was. Yeah.
There may be some concern on why there's turnover, why there's late fees, all of those items. So you may not keep the current manager if it is a third party. So if you don't, then you got to look at what the market rates are for a manager. And most times you won't know the difference between the 4% to the 9% until you get that contract and ask questions. Because even when you get a contract, you have to ask those questions, because they'll say 2% for this, 1% for that, 3%. And then there's these words and any other charges that are incurred that are reimbursable. So you have to account for all of that. And many mom and pops don't account for that.
Yeah.
When you say 9% is a good fee, though,
I didn't say I
I'm
never said it.
asking. I mean, if all the things that they're doing and it's 9%, when you say that's pretty good?
It depends. You can't say a yes or a no. I'm just gonna say it depends. You got to weigh it out with your property. You may say, well, hey, Dad, we're just gonna have to pay the 9% because I'm not going down there every single month. I'm not going to do all that. But now, you're also going to have to look at your end results. What's your NOI looking like? But this is where this is where you may have to explain to the seller why there's such a disparity in your price and what they want. Because their underwriting says 3.8%, which is 4%. I'll tell you right now, it's a big difference if you take that 9 down to 4. It's a difference. So but that's where you just got to explain to them, listen, like you're either managing this yourselves, where did everyone go or what? I don't
supposed to read that. Talking to
I know, right? But seriously, Stephanie, this is when it comes to the smaller properties, okay, smaller properties, 5, I'm going to say 5 because that's commercial. 5 and probably 50. No, when you start getting up to 50, you may start seeing a decline start coming down. But like when you hit like 75, 100, 200 units, then you're going to look at at probably a 4%. 3%, 3.5, because I think with inflation and everything now, I think they're going up to like 3.5, 4% now, even on the larger units. And if they're going up on the larger units, that means on the smaller units, they got to be going up on them too. And cost of living is increasing. So to answer your question, because I'm not for sure if I did, to answer your question, you're going to have to weigh it out. You're going to have to look at your bottom line. Is it feasible? You may want to get with your team and say, hey, how about if we try to manage this? Then I want you to ask this question. Okay. And if something goes wrong, who's willing to go down there and live there?
Who's willing to go to court for evictions and things like that? I'd rather have my time and the peace of mind. That's just me personally. I managed my properties before, And then I started paying to have them manage, and I like to have them manage than me doing it.
Yeah.
It frees up my time, and that's priceless to me.
Yeah, and I totally agree with you. Totally agree. So it's a lot that you just have to weigh out, but it could work. I will say that. You get to know your tenants up close, personal, and you also get to know the town. You get to know the people. So it's a good thing too. All right. Any questions in reference to what we discussed today? No. Okay. So this is what I'm going to do. Since we don't have anyone that live close there, that's here.
McQuay. McQuay, are you in Dallas or Houston? I thought she was in Houston, but
You said Niquay?
Yeah.
Yes, I'm in Houston.
okay.
Wait a minute. Hold on one second. Wait a minute. Wait. Give me 1 second. Let me hit participants. Oh,
You gotta hit
Niquay, have we met
down.
before?
No, I don't think so.
Oh, okay.
Your
Okay.
name, your name sounds familiar. Yeah, your name sounds familiar. I had to go check my emails.
Yeah. Are you into property management?
No, I'm not into property management.
Okay. All right. All right. Okay. So everyone, so this is what we're going to do. Since we don't have someone that's in that Dallas area, we're going to use this one as a learning tool. And if you do happen to find someone that lives in that Dallas area that has experience of commercial multifamily and investing and would like to maybe be a part of a team, I'm gonna tell you right now, reach out to us because we're getting more properties from that Dallas area. Okay. And I would love to break ground in that Dallas area, Dallas Fort Worth area. All right. Right now I'm in the Houston area, and I'll be coming to. I have to come to Houston. That is Dayton, Texas, which I fly into Houston. But for now, if you have any questions, please feel free to email me, and let me put my let me see. Hold on, man. I got to get back over to the chat. Please feel free to email me, and let's get prepared. We'll be doing another property next week. I am slow. I am seriously. Wow. I think that's correct. But you should have my email anyway. But so for next week, let's look at possibly underwriting another part, but let's try to look at something a little different. Not unless if I get a larger property, like 120 units, then I'll use that one. And I'm gonna look for something in the Houston area because that is my market. Houston is my market. So I'll look for something there. Okay. I'll look for something there. But if there's no other questions, I'm going to say thank you very much for coming to the commercial underwriting show. And if you like what you see here and the information, give us a thumbs up on YouTube. And how do you say it? Thumbs up, ring the bell, subscribe. All right. I could definitely use them algorithms. All right. Thank you all for
Excellent as
coming.
always, Dal. Excellent as always. Thank you, Dal.
Thank you.
All right.
Alicia, okay. So thank you all for coming. Stay cool.